Hello friends, it's a pleasure to meet you again. This time we are going to do a very quick revision of assessment procedure. Many students, final students, find it a little bit difficult topic. So this could be an examination revision point, but please understand friends, do not take this alone. For the purpose of examination, this is only for the purpose of revision. You can do it as a revision. If at all you have already had a discussion, you could be doing it as a revision. Now, so it will be a little bit quicker, little bit compressed manner, so that we will keep it as a revision point only. Maybe 1 or 2 days before the examination, you will see, you would be able to do it quickly. First, we are not going to talk about section 139, 140 and all. We will talk about only relating to the assessment. First is section 142. 142 has got 3 different subsections. 142 has got, in fact, 4 different subsections. 142.1, 142.2, 142.2a, and then after 142.2a audit, then we have got 142.3. So all these things that we need to. First, section 142, subsection 1. This has got 3 notices. 3 notices. If the assessee has not filed the return of income, the assessee has not filed under section 139, then assessing officer can issue a notice, asking the assessee to file the return of income. Notice would be issued, asking the assessee to file the return of income. For this return of income, the time limit will be available. The time limit for this will be available in the notice itself. The notice will say you have to file within 30 days, you have to file within 45 days. The notice itself will talk about the time limit for filing this return of income. The second notice that we have got will be, and one more point, this return of income cannot be revised under section 139.5, not possible to be revised. You cannot revise this under section 139.5, not possible. Second, for the purpose of making the assessment, the assessing officer can again issue a notice asking for books of accounts or other documents as may be required. The second notice will be for books of accounts or other documents as may be required. That means other documents could be like invoices, vouchers, bills, supporting documents, agreements, any of those things. So second notice is for asking such books of accounts and such documents as may be required for the purpose of assessment. This second notice that we have got, please understand friends, it has to be issued for the purpose of books of accounts or documents. Maximum it can be only for 3 years books of accounts, 3 preceding years. Of course, for the current year. Let us take an example. Assessment year 2020-21. The assessment is going on for this assessment year 2021. Then books of accounts can be called for assessment year 2021 plus 3 preceding years, which is 1920, 1819, 1718. 3 preceding assessment years, the books of accounts can be called for. So it is the current year of assessment plus 3 years preceding to this. And this books of accounts, if it is called for more than 3 years, let's say the assessing officer calls for 4 years, then it would be valid only to the extent of the 3 years. 4th year will not be valid. You cannot say the entire notice is invalid. No, to the extent it is more than 3 years will be invalid, balance would be valid. So 4 years, no, 3 years notice, that notice is valid to the extent of 3 years, balance is not required. This is the second notice. A third notice. We have got one more notice. Let's understand what is that notice it's all about. Under section 142, subsection 1, the third notice is for the assessee, the assessing officer. Again, for the purpose of assessment. For the purpose of assessment, the assessing officer can issue a notice for such points and matters which the assessing officer requires, including statement of assets and liabilities. Including the statement of assets and liabilities. This asset and liabilities may be there in the books of accounts or may not be in the books of accounts. It may be in the books of accounts or it may not be in the books of accounts. Such information can be called for. So the third notice is for calling such points or matters which the assessing officer requires. It could have statement of assets and liabilities, whether or not included in the books of accounts. Now, prior approval of joint commissioner is required for asking the statement of assets and liabilities which are not in the books of accounts. Which are not in the books of accounts. For getting the assets and liabilities not in the books of accounts, joint commissioner approval is required. Prior approval of joint commissioner. Now, these are the three notices. Quickly, first notice is the assessee has not filed the return of income. Second notice is for asking the books of accounts or asking the books of accounts or such documents as may be required. Maximum can be only 3 years. Third is asking for some specified information which includes statement of assets and liabilities or not. It says for the purpose of assessment. That means assessment should have started. If the assessment has not started, then these cannot be issued. Assessment should have started. That means 143(2) notice should have been served. Assessment should have started. The assessing officer cannot say, you give me this information, then I will decide whether I have to do assessment or not. Like this and that, you cannot say. Assessment should have started. If the assessment has not started, then they cannot issue this notice. Section 2, subsection 8 states, assessment includes a reassessment. Section 2, subsection 8 says, assessment includes reassessment. Therefore, it can be for the purpose of assessment or for the purpose of reassessment. We said 3 notices. For these 3 notices, there is no time limit for issuance of notice. No, there is no time limit for issuing the notice. Assessee has to respond whenever the notice has been issued. Assessee has to respond whenever the notice has been issued. In other words, it is the duty of the assessee to respond to the notice, but it has to be issued before assessment is completed. Assessment completed due date is available in section 153. Before the assessment is completed, it has to be issued. However, it cannot be issued before commencement of assessment. So after commencement, before completion, these notices have to be issued. If you have not complied with these notices, then liable for best judgment assessment. Liable for best judgment assessment under section 144. Also liable for 272A penalty maximum of 10,000 for non-compliance with these notices. Third, liable for search proceedings. You can go for search proceedings under section 132. Typical example is layman language is raid. Also, very rare case, prosecution under section 276D, a rigorous imprisonment of 1 year. A rigorous imprisonment of 1 year. Prosecution, rigorous imprisonment of 1 year. These are the consequences if the assessee does not respond to the notice. Assessee does not respond to the notice. These will be the consequences. Again, friends, I know I'm a little bit fast because this is only a quick revision of assessment procedure. So you have to be having this at the back of your mind that this is only a revision that we are doing. Then, so this is what we have got under section 142, subsection 2. Now, 142 subsection 1, sorry, 142 subsection 1, 3 notices. 142 subsection 2, inquiry by assessing officer. For what? To get a full information. To get full information relating to a person, income or loss. Income or loss. The assessing officer may make such inquiry as he considers important, as he considers necessary. Can take up such information as he considers necessary. That's all. Nothing more than that. Then 142 subsection 2A. 142 subsection 2A is audit under section 142 2A. That means when the assessment is pending, the assessing officer can give direction to the assessee to get the books of accounts audited. To get the books of accounts audited by a chartered accountant. And furnish details as the assessing officer may require. Furnish the details as the assessing officer may require. So whenever the assessment proceedings are pending, the assessing officer can give direction to the assessing officer, to the assessee. Assessing officer can give direction to the assessee to get the books of accounts audited. This CA will be appointed by Income Tax Department. This should be appointed by Income Tax Department. And before giving the direction, the assessing officer should get approval of commissioner. Commissioner or higher forum. Commissioner, principal commissioner, chief commissioner, principal chief commissioner. Any of these. Again, commissioner, principal commissioner, chief commissioner, principal chief commissioner. Any of their approvals required. This audit is mandatory even if the books of accounts have been audited under any other law, or even if it is audited under section 44 AB, tax audit. Tax audit also mandatory. You have audited under any other law, then also it is mandatory. This audit would be mandatory. Because the scopes of the audits are different. This is based on Delhi High Court judgment. Based on Delhi High Court judgment. In the case of Super Cassettes Industries. Delhi High Court judgment. Super Cassettes Industries. Where they have said that this audit is mandatory even if it is audited under 44 AB or under any other law. Because the scope of the audit is different. Now, before giving the direction, who gives the direction? The assessing officer will give the direction to get the books of accounts audited. Before giving the direction, principle of natural justice have to be followed. That means assessee should be given an opportunity of being heard. Before directing the special audit, we will call it a special audit. Before directing the special audit, assessee should be given an opportunity of being heard. This is based on Rajesh Kumar Supreme Court judgment. Based on Rajesh Kumar Supreme Court judgment, principle of natural justice should be followed, and the assessee should be given an opportunity of being heard. Rajesh Kumar Supreme Court judgment. Now, this audit should be carried on by a chartered accountant. The time limit for completion would be 180 days. The time limit for completion will be 180 days from the date on which the assessing officer directs. Maximum it can be only 180 days. It cannot exceed 180 days. Within that also, the assessing officer can say, give me within 3 months, give me within 4 months, fine. Please understand, friends, the law gives you 180 days. It doesn't tell 6 months. There is a difference between 180 days and 6 months. 6 months could be 182 or 183 days. Here it very specifically says the time limit will be 180 days. So you have to be a little bit careful on the time limit. The expenses for this audit will be borne by the central government, will be borne by the central government. That means it is not required to be paid by the assessee. Assessee need not pay, the central government, that is the income tax department will pay. If there is a non-compliance, if there is a non-compliance, that means you have not got your books of accounts audited, then you will have the same out of 4 consequences that we saw, 3 consequences will be applicable. That is, you would be liable for best judgment assessment. Liable for best judgment assessment. First. Second, you would be liable for a penalty of 10,000 rupees under section 1272A. Third, you would be liable for a rigorous imprisonment of 1 year. Rigorous imprisonment of 1 year, 276D. These are the consequences if the assessee has not complied with the audit. Let's say there was a delay in submitting the audit report. We saw, friends, that the time limit for submitting the audit report is 180 days. There was a delay, but this delay is not because of the assessee. It is attributable to the CA. Attributable CA. Then there cannot be best judgment assessment. 144 is not possible. It's not possible to go for 144. This is Supreme Court judgment in the case of Swadeshi politics. Swadeshi politics. Supreme Court says if there is a delay in submitting the audit report, not because of the assessee, but because of the auditor, then it cannot be liable. It will not be liable for 144. Then reference to, this is what you have got for section 142. So the quick revision is what we are doing now. Then a reference to valuation officer under section 142A. Next is a reference to valuation officer under section 142A. For the purpose of assessment, again this is also for the purpose of assessment. If the assessing officer wants to estimate value of any jewelry, value of an asset, or value of any investment, then the assessing officer may refer to valuation officer. For example, what? To estimate a fair market value. Let's say the assessee has received a gift of jewelry. Assessee says the fair market value is only 45,000. So he says it is less than 50,000, therefore I did not pay tax. But assessing officer is not satisfied, refers to valuation officer. For what purpose? To determine the fair market value. To determine the fair market value. Now, the valuation officer has got time limit of 6 months. Please understand. For the audit, it is 180 days. For here, it is 6 months. This 6 months is also from the end of the month. This 6 months is also from the end of the month in which the reference was made. In which the reference was made. That means, let's say the reference was made on 19th June 2021. End of the month is 30th June 2021. From there 6 months, which will be 31st December 2021. By 31st December 2021, the valuation officer should give the valuation report. Now, the next thing that you need to understand is, if you have not complied, that means reference is made to the valuation officer. Valuation officer will determine the value. How? Only the assessee again has to submit the evidence. Assessee has to give some kind of evidence or documents. If the assessee does not cooperate, liable for best judgment assessment. The consequences of failure with the valuation officer, liable for best judgment assessment. So the next one that we need to understand is section 143 subsection 1, processing of income tax returns. Income tax returns that is filed by the assessee, under section 139, normal return, belated return, return for loss, revised return, whatever return that has been filed by the SSE, or a return filed in pursuance of a notice given under section 142.1, in pursuance of a notice given under section 142.1, then this has to be processed under section 143.1. Now, after processing, the following adjustments can be made. The following adjustments can be made while processing. I'll say while processing, following adjustment. First, arithmetical error, rectification of any arithmetical error in the return. Very rarely this happens these days because of everything system processed. Then denial of incorrect claim. Incorrect claim. One claim has not been made by the SSE properly, that claim will be denied. Then SSE carry forward the losses even if the return of income is not filed on time. Not filed. For you to carry forward the business loss or capital losses or speculation loss, the return of income should be filed on time. The SSE did not file on time, still carrying forward the losses. No, not possible. It will get processed. Now, in the tax audit report, which is issued by the tax auditor, Form 3CD, there has been an expenditure that is disallowed, or there is an income that is increased, but the corresponding thing has not happened. The corresponding thing has not happened in the return of income. Expenditure disallowed or income increased in the tax audit report, but it is not considered in the, this is there in the tax audit report, not in the income tax return. Then again it could be processed. Then fifth one, return of income not filed on time, but SSE is claiming deduction under section 10AA, SCC 10AA, deduction is claimed, or claiming part C of chapter 6 deductions. Claiming part C of chapter 6 deductions. So these are the 5 things that can be adjusted. That is all the arithmetical errors, denial of any incorrect claim, losses carried forward even if the return of income has not been filed on time, disallowance of an expenditure or increase in the income which is stated in the tax audit report but not there in the income tax return, disallowance of section 10AA or part C of chapter 6 deductions if the return of income is not filed on time. After these have been identified, then a notice would be sent to the SSE, and the SSE should reply within 30 days. The SSE should reply within 30 days. If the SSE does not reply or the reply is not satisfied, then this should be the total income would be computed after making these adjustments. The total income would be computed, and on the revised total income, tax should be computed. After all these things, there could be a scenario where it might result in a refund also. If it is a tax payable, that has to be paid. If it is a refund, that has to be given. After all these things are processed, then the intimation has to be sent to the SSE within 9 months from the end of the financial year in which a return of income is filed. 9 months from the end of the financial year in which the return of income was filed, within that 9 months period, the intimation has to be sent. For example, let's say the return of income for the year has been filed on 28th August 2021. The end of the year is 31st March 2022. Within 9 months from the end of the financial year, that is by 31st December 2022, 143.1 has to be processed and then it has to be sent. So 143.1 can talk about tax payable, or it can also talk about refund. It can also talk about refund. If there is neither tax payable nor refund, That means whatever return of income filed has been accepted. When the return of income is filed, you will have acknowledgement. That acknowledgement would be considered as 143.1. That acknowledgement would be considered as 143.1. The time period is for sending. That means even if the assessee has received it beyond this time, no problem. A receipt by the assessee is not a criteria. What is criteria is that it has to be sent. The next one is when the 143.1 has been processed, and if there is a demand, whenever there is a demand, there should be a demand notice attached to that. There should be a demand notice. But for 143.1, that itself will be considered as deemed demand notice. That itself will be considered as deemed demand notice. So whenever we get a 143.1 and there is a demand, no demand notice is required under section 156. No demand notice is required under section 156. The demand has to be paid within 30 days. Otherwise, penal consequences will arise. Otherwise, penal consequence will arise. So now, assessee has received the 143.1, but the assessee is not satisfied, is aggrieved by the intimation. Then the assessee has got three options. File appeal before CITA under section 246. File appeal before CITA under section 246. File a rectification petition under section 154. A rectification petition under section 154. Or file a revisionary petition under section 264. These are the three options that the assessee has got. If the assessee is aggrieved by the demand, these are the three options the assessee has got. Next, 143.2. 143.2. This is the scrutiny notice. Mandatory notice that has to be served. Mandatory notice that has to be served for the purpose of doing assessment under section 143.3. This has to be served within 3 months from the end of the financial year. From the end of the financial year in which the return of income is filed. It has to be served. It has to be served. That means in August 2021, the return of income was filed. End of there is 31st March 2022. From the 3 months, that is 30th June 2022. Within this, it has to be served. The assessee should have served. The assessee should have received. Assessing officer should have served. The assessee should have received. That means if the notice was received beyond this time, then it will not be a valid notice. It will not be a valid notice. The time limit is not for issuing the notice. The time limit is for serving the notice. Servicing is a criteria. Now let's say the assessee was served a notice beyond the time. Let's say he received the notice on 4th July 2022. Notice was served beyond the time. That means it is not a valid notice. If it is not a valid notice, then it will not be a valid assessment. Assessee received the notice, participated in the assessment. Received this notice, participated in the assessment. Then after that, 143.3 assessment was passed. When 143.3 assessment was passed, it gave you a demand of 10 lakhs. Now assessee sees, oh, there is a demand of, let me try to find out a reason. So he now says, this 143.2 notice is not valid in law. He says this after receipt of 143.3 notice. No, not possible. Why? Section 292 BB. Section 292 BB states that if the notice was issued beyond the time limit, assessee has cooperated in the assessment, then assessee cannot object to the validity of the assessment after the assessment is completed. Notice was not served on time. Notice was not served on time. Or notice was not served on him, not served on him, or notice was served in improper manner. Yes, any of these three things have happened. Assessee was silent during the assessment proceedings. Then after the assessment proceeding got completed, assessee cannot raise a flag saying that the assessment the notice was not served properly. That means what is the thing that the assessee should do? Immediately after receiving the notice, should check the validity of the notice. If the validity of the notice is not correct, raise the issue immediately and then participate the assessment. No problem. Participate. If you don't participate the assessment, you would be liable for best judgment assessment. Don't do that. Participate in the assessment. After participating in the assessment, once you get a demand notice, then check the challenge the validity of the notice challenge the validity of the assessment based on the notice. That means 292 BB. Notice is invalid for some reason, saying that it was not served on him, it was not served on time, it was served in an improper manner. Question immediately during assessment. Question immediately during the assessment. And then participate in the assessment. Once you get the assessment order, challenge the assessment order on the basis of validity, saying that notice is not done properly. The assessee remains silent. Assessee remains silent, did not do anything, remains silent. Then participated in assessment. Remain silent, participate in the assessment. After that, cannot challenge the validity of the assessment, saying that the notice was not served like that. Validity of the assessment cannot be challenged at a later point in time. Challenge it now itself, then at a later point in time also you can challenge. If you don't challenge now, at a later also you cannot challenge. Then scrutiny assessment under section 143 subsection 3. After all these things has been gathered by the assessing officer, the assessing officer will complete the assessment by following two steps. First, find out the total income, and then finding out the tax payable. Both has to be done. Finding out the total income as well as finding out the tax payable. If only the total income is determined, then it is not sufficient. It is not sufficient. Both has to be done. So that is what you have got for 143.3. But let's understand 143.3 in special cases. Let's say institutions that are covered under section 10, eligible for exemption under section 10. During the course of the assessment, the assessee officer finds out that this institution did not comply with the exemption conditions. Then the assessing officer should intimate to the central government, saying that this institution has not complied with the conditions. Then the central government will withdraw the exemption. Central government will withdraw the exemption. After the exemption is withdrawn, 143.3 assessment will be completed without exemption. 143.3 will get completed without exemption. That means first the assessee should inform to the central government will withdraw, then only you can complete 143.3 without exemption. Assessing officer on his own cannot deny the exemption without central government withdrawal. So if an exemption for the institution covered under section 10 has to be withdrawn, then the assessing officer has to intimate central government will withdraw, then the assessment has to be done. Same manner, even for an association which is covered under section 35, Even for an association covered under section 35, the same thing has to be done. Now, let's understand few issues that we have got in assessment. Let's say we'll take an example of, we'll take a first one as res judicator. Res judicator. Is it applicable for income tax cases? Before we go and understand what is whether it is applicable, let's understand what is the meaning of res judicata. It is a case whereby the same issue cannot be taken to the same court by the same party. Same issue, same court, and the same party. Not possible. I'll just give an example. A and B are fighting for a piece of land. They went to the Madras High Court, and then Madras High Court decided that the land belongs to A. So B may not be happy with the judgment. So what he has to do? He has to go only to the Supreme Court. He cannot again go to the High Court. If he again goes to the High Court, then where is the matter? It just keeps on revolving. Next again, High Court says it only belongs to B. Now again, A will go to the same Madras High Court. B will go to the Madras High Court. Where is the finality? Finality will not come. So res judicata means same issue. What is the issue? Issue was in relation to the land. Same court. What is the court? High Court. Same party. Who is the party? A and B. Not possible. Same issue cannot be taken to the same court by the same party. That is res judicata. However, res judicata is not applicable for the income tax. You can go to the same court, same issue, same party, but for a different years. Let's say it is a 43B disallowance. 43B disallowance. You have gone to the court for 1415. The day Madras High Court, you have gone. Madras High Court has decided in the favor of department. Then for 1516, you can again go to the Madras High Court on same 43B. So you can go to the same court, same issue, same party, but for a different years. Why? Because there could be a change in the law, there could be a circular, there could be a notification, all those things might be there. Therefore, for the same issue, you can go to the same court. But the only thing is it should be a different year. That's the only thing that you need to be careful. So res judicata is applicable. In fact, res judicata is not applicable for income tax cases. Next, there are two types of set aside. Assessment can be set aside by ITAT, High Court or Supreme Court, stating that you have not carried on the assessment properly, therefore the assessment is set aside. Like that, High Court, Supreme Court or ITAT can do. CITA does not have the power to set aside. Now, there are two types of set aside. Partial set aside, complete set aside. Partial set aside means only one specific item has been set aside and only for that item you have to do an assessment. So in the original assessment order, let's say 3 items have been disallowed, A, B, C. ITAT receives the file and sees that for item C, the assessment has not been done properly. Only few items, one or few items. Now, it just ITAT sends the file back to the assessing officer for fresh assessment and to reconsider the issue of item C disallowance. So during the course of that item C disallowance, assessing officer cannot take up any other fresh issue. No fresh issue can be taken. His hands are tied. He has to deal only with that issue it has been set aside. That is what we call it as partial set aside. Complete set aside means ITAT remands the case to assessing officer for a fresh assessment. Again, assessment order, there are 3 disturbances, A, B, and C. ITAT is not happy. So fresh assessment, because the assessment was completed in haste. Now, the assessing officer can disallow again item A, B, and C, and also take up one more item D or item D, whatever. Fresh issues can be considered because it is full set aside. Assessment was set aside in toto. That is full was set aside. That means if it's a partial set aside, only that item it has been set aside can be considered. If it is a total set aside, complete set aside, any item can be considered. Then the next one is section 144, best judgment assessment. Best judgment assessment. That means if the assessee has not filed the return of income under section 139, not filed the return of income, or has not responded to notice under section 143.2, not responded to notice under section 143.2, or has not responded to notice under section 142 subsection 1. We discussed what is 142 subsection 1, or not responded to 142 2A auditor not responded, then any one it has not responded. The assessee has not responded for one, then liable for best judgment assessment. The assessing officer, by taking whatever information that is available, will pass the order. That is, he will not have the full information. With whatever information that is available, based on his best judgment, he will pass an order under section 144. Best judgment assessment can only result in tax payable. It cannot give you tax refund. Not possible that a refund can be granted under section 144. Best judgment assessment is also appealable. This is also appealable. Friends, with this, we are done like half of the assessment procedure. We will catch up on one more day to talk about 147 income escaping assessment. Fully revamped, complete revamp has happened, plus time limits for assessment, plus rectification. These three we will meet upon one more day to discuss this. As I was again telling you, what we have been discussing is only a quick revision. We have not been discussing on the entire detailed aspect. It was only a quick revision. So in case you have already seen this assessment procedure, this video will be helpful. So we'll catch up again for one more video where we'll see the balance aspect of assessment procedure. Thank you.